Hello, everybody. Thank you all for being here. Happy Sunday. Happy early Monday morning for those of you on the other side of the planet. Let's jump in. Big show today. We have a lot of stuff to cover. And jump in. Big show today. Sorry about that little echo that annoys people. We got audio, which is always fantastic. But today we're going to answer the top questions from the community for the week. We're going to look at traditional market theories and do they hold water. We're going to look at the ETH Bitcoin chart. We're going to talk about how we do covered calls. Thank you, Dog1. Thank you, Mr. Hammer. Thank you, Andy. Andy, you're up early in Australia. We're going to talk about perpetrating arbitrage trades as well, how to transfer your seed from an old wallet to a new one, very common question. And we're going to look at two new wallets that everybody wants to know about, Tangem and Arculus, and see how they compare and how you can use them. All right, so let's jump in and go through over 52 nuggets in a very short window of time. And of course, none of this is ever investment advice. It's edutainment. And of course, all the questions come from Patreon. Big thank to everybody in Patreon. I live for this community, work with you 24/7, and it's awesome. And remember, it's not just me. It's all the other brilliant minds in there too. So with this, very first question from the community is from Crypto Dancer. What a cool name. So is this year different when it comes to the saying, sell in May and go away? It appears that at least for the IA plays, such as Meta, Google, NVIDIA, Palantir, Path, it was not a month to stay on the sidelines. Absolutely not. There's so much to cover here. This is such a great question, but let's start with data, because data always tells the truth. And sometimes there can be these old proverbs that are just there because something happened 100 years ago or 50 years ago. But let's look at the data over the last 50 years and try to figure out exactly what's going on. So sell in May stats, last 50 years. And by the way, I am an absolute student of stock market history. I've got all the numbers for all the assets going back sometimes 70, 90, 100 years. And I analyze trends by months, by years, by presidential elections. I look at all the crypto stuff too, so it's very, very important. But here are the summary stats, okay? So the average return from May to October is minus 0.2%. You can call that flat, ladies and gentlemen. And remember, that's a big window of time. May, June, July, August, September, October. That's 6 months. It's half the year. And yes, it includes some bumpy times because historically, sometimes September was absolutely horrible. And volatility and volumes are low in the summertime like August because people are away. And that has a big part of it. Now, the average return from the other half of the year, November to April, plus 7.9%. So the big takeaway just from the last 50 years of data. And I always say, don't ever not be in the market. Look at the last 50 years of data. Worst thing that can happen for a 6-month period is you'll lose minus 0.2%. And the other 6 months, you make 8%. On average, every year for the last 50 years. So for those of you who say, oh, S&P 500 isn't going to go anywhere for the next 10 years, look at history. That has the answers. In addition, the win rate from May to October, 46%. What this means is the S&P 500 rose in price on 46% of the days from May to October. That's not bad, it's nearly half. The win rate from November to April is 77%, a lot better. And the Sharpe ratio from May to October is 0.2. Now, the Sharpe ratio indicates that the sell in May, go away strategy has generated a low return per unit of risk, but not negative, low. And the Sharpe from November to April is 0.7, which is more positive, but both Sharpes are positive, which is good. Now, let's go and look at a couple of things as well. Very important to look at when you look. You can't just take a proverb and not dissect it. And as I always say, and this is from a deck I did like 7 or 8 months ago, invest in disruption. And this was all of my positioning related to things I've owned in the past and what I have never owned. And you can see here over the last 10-year returns, Bitcoin, Tesla, NVIDIA, Netflix, Amazon, Microsoft, Apple, Google, all have astounding returns. The S&P 500 over a decade, 300%. And you can see as well, what's the last one there? Gold, plus 7% over a decade. Woohoo! As I say, I don't get out of bed for that type of return, especially not over 10 years. That's compounded less than 0.4% per year. And forget dollar debasement. The other thing that I always say, Remember this, to be in the top 1%, you have to do what the 99% won't, okay? We've covered this many times. If you follow the herd, you will get nowhere. Don't mean to be blunt or harsh, but that's a fact of life. And summary, Sell May Go Away is based on index. Indexes are crap, as I say. Find the winners. Now, what's also very important this year is watch the macro. We have money printing coming back and the Fed pause almost in place. Again, it's later than expected, but here we are. These are reasons for the markets to be very bullish. And again, there could be a little liquidity suck because the government has to raise 600 billion, 700. Let's just round it up to $1 trillion over the next 4 to 6 weeks, 12 weeks maximum. That will suck some money. But remember, there's $5 trillion on the sidelines that might buy these treasuries. Are people going to sell their Tesla stock to buy a US Treasury that pays 5% when the money printing over the next 2 years will be 11.6%? Nope, they're not going to, if they have a smart brain. But there are people that believe Treasuries are the way to go. And again, don't follow the 99%. Be different. Think different, like Steve Jobs would say. And finally, the strategy for the S&P 500 shows that it hasn't been successful in recent years. Don't be the 99%, be me. So great question. Thank you for that. Next question in the box is Terran Crypto. Should you be interested in revisiting any of the Should I Buy videos soon? The bear market is either over or about to be over, and it seems like a solid time to gather alts. We will talk a little bit about altcoins today too. And any update and opinions, quality alts like Cosmos, Link, Avalanche. One of the weird things about my position, and I learned this the hard way, is, if you slate something, you ignite an army to come after you, and it's very unpleasant. So I've decided in the community, I will be very public about what's bad and why it's bad, but not on YouTube, okay? So it's just not worth it. Now, what I do look for, and the reason why there has been a dearth of Should I Buy videos, and this is my approach. I look for a sustainable tokenomics model that is a framework that governs the creation, distribution, and the use of a token. And sustainable means not lining the insiders' pockets. Very, very important. The type of stuff that happens, even with big names, is shocking to me. It never ceases to amaze me how many individuals will get up in public and they will lie openly in public about data about their tokenomics. That should be illegal. People like Gary Gensler should be on top of these guys. And gals, it's not just men, it's women too. Real world use cases is very important. This is a product market fit. It's absolutely critical that the best tokens have real world use cases, i.e. a purpose, and that's it. Also a solid roadmap, a well-defined roadmap about the plan. It could be as simple as the path to 1 billion users. That's it, real simple. And then all the different elements around that, exactly, features, partnerships, initiatives, tools, maybe phones, etc. That's critical. Then a strong community is also very important. And solid chart, technical analysis. I say FA first, TA to determine your entry point. Now, let's look at a couple of basics. I'm not going to go through the full 6 points. I'm going to talk about the first one and the last one. And here we are. So I do not want to make a should I buy that basically over 90% of the time I'm going to say no way because people get offended. So it's not worth it. I will do it when I find a winner. So this is the first step kill zone. And I only look at the top 10 percentile of cryptos based on the Crypto Compendium score. Thank you, KN. Second step, or the last step, I should say, this is step 6, strong chart entry for signal, which also brings into account things like valuations, comparative valuations, valuations per daily active user, etc., etc. And at the end of the day, and you look at the top 500 cryptos, run them through our models, there's like 6 to 8 names that are worth it. So it's rare I come across names that I'm not going to say, no, I'm only going to do should I buy pretty much when I'm either on the fence or I believe it's worth it. Otherwise, it's just not worth the pain. Last time I did one, about 1 or 2 months ago, I can't remember, was Render, should I buy? Because they had a lot of good things cooking. One was moving to the Solana blockchain, which is good. Number 2, it's an AI play. And number 3, it had a lot of potential growth and a very unique value proposition, great product market fit. And since then, that name has done pretty well, and the performance, I also tie the TA piece, the buy signal, to getting in, and of course making these videos too. But again, they are so few and far between, and crypto is so fraught with risk. I can't find enough names, and the ones I've kind of done already are there, and there's very few. In fact, I've done, I think, 20 plus should I buy videos, and only 6 or 7 of them resulted in actual buy. And since then, the calculus has changed on many of them too. So with that, everybody, if I find a treasure, I do have maybe potentially one I'm looking at, but it's way outside the top 2,000. And the tokenomics aren't good, but the potential is there. And that's where I'm kind of torn, because this is my threshold. It's got to be in the top 10% of tokenomics just to be able to get my attention. So I'm torn on that one. So stay tuned. As soon as I find one, I'll make a video. Next question is from Erokonaut. Roughly, how high do you think ETH Bitcoin pair could go, given the potential breakout above 200-day moving average? Super question. And this is one I think about all the time. I've been watching for a long time, and I'm glad you're thinking in pairs. First of all, let's kick this off with where we are in the so-called alt season. I believe we are on the cusp of bouncing big time, and let me tell you why. So over the last month, you can see here, Bitcoin is down 4.5%, and more than half of the altcoins have performed better than Bitcoin over the last 30 days. Not a big period of time, but it's good enough to get a signal for me. Top of the list here, and I hope it's not a coincidence because of my Should I Buy video, but Render has been the best performer over the last 30 days. So again, you look at 50 cryptos, it's very hard to identify the winner, but when you look at all of the data we look at, it stacks the odds in your favor. Number 2, Lido, etc., etc. But you can see over the last 30 days, Bitcoin's down 4.5%. And at the very bottom right, you've got Optimism, ICP, Flow, Ape, Algorand, Theta, stuff that obviously, the Phantom one had some FUD regarding some multi-chain, FUD regarding TVL, etc. How much of that's true, I don't know. I don't own Phantom, so I don't look at it. Now, if Phantom became the killer for one of my positions, I only have 3, I'd be concerned. So with that, that is where I believe, yes, all season may be on, and Bitcoin's been incredibly strong for a long time. So zooming out, let's look at the chart here. This is ETH Bitcoin chart, and you can see here, I drew in some lines, 2 big red lines. It's kind of like a compressing wedge downwards, and there will be a breakout out of this wedge for sure. That takes into account the bottoms and the tops, and you get that rough, crude line. And you know me, I like to draw trend lines. The other one in red is that 200-day moving average. And you can see we just poked our head above it, and the trend is up, blue. So I do believe there will be a breakout to the upside. Now, zooming in more, you can see how strong that trend is. It's a big blue fat trend, which is a solid one to get. Also, you can see the support areas in the past. So I think it definitely does have legs. Now, in answer to your question, how high could we go? Well, I'm going to bring in one of the models we built last year called the Layer Out model. This also works for pairs. And based on this, I believe we could go as high as 0.08 to maybe 0.1, and that is 18 to 24 months from now. That would not surprise me at all. You guys can do the math. So for example, if Bitcoin's trading at 30,000, that 0.1 ratio would mean Ethereum's trading at $3,000. Okay, so that means it has to run almost twice as fast as Bitcoin to achieve that level. So we'll see what happens, but I'm pretty confident of that, especially with the deflationary nature of Ethereum right now. So thank you for the great question. Next question is from Tigo John. Would you mind walking through how you use IA tools to do covered calls, both covered calls on long hodls like Tesla, but also the more aggressive CCs that made you? So this is a great question. And yes, for those who may not know, a lot of what I did and how I was able to get out of the rat race was doing basic option strategy, covered calls initially in the 90s, socking away gains, buying real estate, covered calls, sucking away gains, buying real estate, wash, rinse, repeat. That was kind of my whole thing. My trading strategy has gotten a lot more sophisticated since then, but even back then it worked. So let's talk about first step of what I did to get started. And covered calls are a great way to get started. First of all, find a range rider, stocks that have been trading between support and resistance levels for an extended period of time. Use TA to identify these stocks, draw your support lines, your resistance lines, and sell a call at the top of the range. Buy it back at the bottom of the range or let it expire worthless. That's what I did a lot of the time in the 90s. And today I do a lot more. I'd sell a lot more puts, sell a lot more calls, buy calls, etc. Do all sorts of spreads. But showing you how we do this using the model. This is a company called SoFi. This is a very nice little range rider. If I was still doing the cover call strategy, I'd probably be doing it on something like SoFi. So easy to see. So you dial in the chart. This is using IADSS. You look at your trends. You zoom out, whether you start at the 1 hour, 2 hour, 4 hour, 8 hour, daily chart. You find the pattern that works best for you. You dial in your win probabilities across all the different models. And there you go. So you get your green flag. That's when you could enter SoFi. And then you sell a call when you see the red flag to sell. And then you buy it back when it says buy, or you let it expire worthless. Typically, I'll zoom out for this. I like to sell calls if I'm selling them 6 to 12 weeks out. That's where you get most bang for the buck. That's where most of the theta, which is time value, dissipates quickly. And then buy it back, sell it again at the peak, buy it back, And you can do this literally every 6 to 12 weeks. You can turn $10,000 into $20,000 and then $20,000 into 40, etc. But you're going to be very disciplined, very patient, and move from asset to asset, because if SoFi goes in a rally, you might lose out. So for example, I was in NVDA and I sold a call and I left $100 on the table because NVIDIA spiked in after hours, so I couldn't get the call back or couldn't cover it. So sometimes if you have a really, truly winning name, like would I sell a call against Tesla? Only after a gamma squeeze. Only when I'm sure it's going to come back down to earth and mean revert. But things like this, you can do all day long. But remember, there might come a time where you get called out and then you find another asset and you do it again. And that's as easy as that. It's like shooting fish in a barrel if you have the system and the process. Next question is from FKA Zeroth. Hope I got that right. Interested in IA Arb Cloud. A lot of trading questions today. Hope this is fun. But again, this is what we can do during kind of flat or sideways markets as well. Also maybe in rampage markets too, but mostly in flat or sideways markets. And that's the way the markets have been for the last 3 months. So it's great for things like arbing and making extra money, just like covered calls, like SoFi I just showed you. So this one is as someone who is new to this type of trade, what are some reliable platforms that allow a direct swap between Bitcoin and MicroStrategy and vice versa? Also, my bag is 0 MicroStrategy and 0 Bitcoin. Was a great strategy to start allocating to Bitcoin arbitrage. So for me personally, I've been waiting for a nice dip on Bitcoin to get more FISU, like hopefully praying almost to see 26K, but I don't think we're going to see that. There's simply too much accumulation. The whales are buying up any dip. That's why we're hovering around 27K. Everything that goes into the 26s, it gets bought up. So at some stage, you just got to bite the bullet and get on the train, just like in the property business as well, real estate business, get on the ladder. So here are some names of companies. This is by no means comprehensive. It's also some of the names in which I use. But first, some examples that are common to all of you. And you have to typically move to cash first. So if you buy Bitcoin on one of these platforms, you got to sell it and then you got to buy the other asset. If you have the charts, you can do that very effectively using a 1-minute chart or a 5-minute chart as well. But note, eToro is very expensive, and Fidelity and Robinhood have no fees. In fact, we have a lot of people that are arb trading in the community using Robinhood too, and their fills and the spreads are fantastic. Although it is a bit of it's not a popular name because they sell customer data, but if you're just doing your arb thing, who cares? But, have just your play bag on that particular exchange. Next in the box is, this is TradeStation. And it's funny, I used to use TradeStation back in the 90s. But this is a direct swap capable. Your bid-ask spreads are only $20 per Bitcoin. So if you have a $30,000 asset, the spread between bid and ask is tiny on a percentage terms. So that's awesome for TradeStation. And also interactive brokers, commissions, they do charge commissions, but it's very small, 0.12% to 0.18%. And they have a bunch of different cryptos and equities and options in which you can trade too. So they're all some examples. Some are very location specific. So in order to find the answers to what works in your specific country, go to Discourse, the IA community here, and we have per tool, we've got a whole set of topics and communities. This is the Arb Cloud, just an element of the amount of conversations that are going on, from all the experts, traders in the community, what they do, for example, if Bill is in Switzerland, how he does it, etc. And that's where all the answers are. I can't tell you exactly what the spreads are on exchanges in Timbuktu that I don't use, but there's probably somebody in the community that does. So let's go to the next question. Is from Jalal Vani. I have noticed you reference many Substack letters in your videos. Yes, I do. It would help if you can mention your favorite Substacks topics-wise. You inspired me to read, and I would like to subscribe to them. Yeah, as you know, I read a ton. I did make a mistake in a video. Well, not a mistake, but I said I'd read 300 articles a day. That's always my goal. But I start with crack of dawn. Sometimes I'm reading articles at 3 a.m. in the morning. But I said a mistake that misled some people, that they thought I did it in an hour because my calendar of my day says read, and I had 300 articles. I don't read 300 articles in a day, but over the space of 24 hours, yes, I try. Now, here are some of the Substack subscriptions that I subscribe to. There's Doomberg, Bitcoin Archive. There's like macro stuff, Crypto Slate, Econometrics, K33, Beat Market, Swissblock, Substack, Reads, No Opinion, Market Sentiment, Macro Markets, The Intellectual Investor, etc. These are some of them, but there's a problem. Some of them are very expensive. For example, these are the prices that I pay. And of course, my job is to research for you all, so you don't have to spend this. But some are $6.99 a year, some are $1,200 a year, some $365, some $1,000, some $4,600, etc. So if you literally, I spend tens of thousands of dollars in subscriptions every year, data subscriptions, Substack subscriptions, newspapers, everything else. And I don't expect the average person in this audience to do that. But I need to be able to have the best information to give to you guys. So think of me as your filter. I read it all for you, pull out the best parts, and deliver it to you. Therefore, you should subscribe to the channel. In addition, some of these things are often only weekly. You just get one newsletter. So you could be spending $1,000 in a newsletter, and you get 50 as a result of that. And that is, a problem. Now, we do have one, and a lot of it is fed by many of the data that I read from all my sources too. And I wouldn't do something unless I know I can be the best. So we have almost a daily publication. It's $45 a year, which is about 13 cents a newsletter. Pretty much every day. It's the least expensive, most frequent, most alpha-filled, and the broadest scope, covering crypto, equities, real estate, macro, models, trades, unique insight, etc., to make you smarter for as little money as possible. And all the proceeds go to our community writers as well. So great little father and son team. So that's kind of what we do. So check it, even subscribe to it for free. Somebody will put a link up there and just check it out. You get a lot of the glimpse of what you need in the nuggets. And if you want more deep, consider investing again. Thank you for that. Next question is from Juju John. Bitcoin is, I have a crappy UK work pension with Scottish Widow retirement saver that has done nothing over 10 years. I'll zoom out for a second. This is like so many pension funds and mutual funds and everything else. Again, if you're not making more than 14% on your asset over a 3 to 5 year period per year, you're not treading water because the governments are printing money faster than that. So your purchasing power is debasing. That's why you have to be more aggressive. Buying an S&P ETF or a mutual fund or whatever isn't going to get you where you need to be. But there's a few little twists here to this story. I want to swap it out for a SIPP pension where I can blaze my own trail. I love that word. Choose my own stocks, but worried if I do, I'll lose the company's contribution. That is so critical. I'm looking at different providers, but so many hidden fees. And what's the best SIPP provider in the UK? So this applies to everybody who works, has such a fund. What you can do in some cases is pull some of what you already have and move it into a self-directed SIPP or ISA or superannuation plan in Australia, whatever the case may be, wherever you are in the world. That's one thing. But you don't necessarily want to give up your employer contribution. And first of all, if your employer matches 55 to 100% of what you put in, don't turn that money down. That's free money. Take it, bank it, and match it. Maximize it as much as possible, even if it has to go into a crummy fund. But at least you'll get that free money, which will make up for the alpha you're missing in being in a crummy fund. So find out how much. If they match your contribution, keep it. Remember, this can significantly increase your returns for everybody out there that gets that. But companies are becoming cheaper and chintzier over time, and they're no longer matching your contribution, or they're giving you half. If it's less than half, blaze your own trail. So here are some of the names. Now, I'm not an expert in UK SIPs, but we did some research, and AJ Bell comes out as being excellent. Check out a lot of the reviews as well that exist for all of these. Popular choice. Platform fee is only 0.25%, one of the lowest on the market. And they have a wide range of stocks and shares to choose from, including things like Tesla. Hargreaves Lansdown, very low fee SIP. Platform fee of 0.45%, slightly higher than the previous one. But they also have a wide range of funds, stocks, and shares to choose from. So when you're looking at these, make sure they have your disruptive stocks, your AI stocks, and your Bitcoin proxies like MicroStrategy and your Teslas and everything else, because that's where you want to be over the next 8 to 10 years. Fidelity is another one. It's the third option. Low fees. Their platform fee is 0.35%, which is, again, competitive as between the last two I just mentioned. And they've got a wide range of funds and stocks to choose from. And literally, do your own research. I don't want to vouch for any of these because I've never used them, nor will I ever use them. But find the lowest fees, find the investment options, find the broadest options. Even if you can do options like covered calls, like we just discussed, some of them do that in the US. I don't know about the US. And also solid, long-standing reputation. Very important. But check your employer contribution as well. First, next question is from Handy Andy. Oh, we're back to wallets again. Considering the ledger news and seeking alternatives, is it sufficient to connect a new wallet to existing assets via the recovery seed phrase, then destroy the original hardware wallet? Or is there a vital need to send these assets from the old address to the new address, despite the transaction fees? This is a brilliant question that you all need to know. Anybody who self-custodies crypto or even is thinking about it, they need to look into this. Absolutely critical. So first of all, a couple of key things to keep in mind as you go on this journey. The short answer is do what you are comfortable with. Do not risk messing anything up and losing access to your coins or shipping your coins to a wrong place. Take your time. Don't panic. Don't rush. This is how mistakes are made. And keep in mind, your crypto isn't going anywhere. Your seed is not compromised, so there's no rush. And always test with a small amount first. And we just don't like the security practices and the pattern of behavior by Ledger. And this Ledger Recover program was the last straw, but it doesn't mean you're in a rush to get off of it. Okay, because I assume that's what you're talking about. And to migrate off a Ledger, both of the options you mentioned are fine, but we're going to go through them in detail as well right now. First of all, migrating your seed. Take the seed to your Ledger and install it on your Trezor, whatever wallet you choose. Check your Trezor to make sure all of your crypto has been successfully loaded. And then manufacture reset your Ledger. Maybe, well, do whatever you want to do. Some people hit them with a hammer or burn them or whatever. But maybe it'd be worthwhile to have a backup or use it for some altcoins. Who knows? And be careful, the Trezor you are installing your seed onto is directly from the manufacturer and not a compromised device. Do not buy a wallet on eBay or Craigslist or from some shady website, or pick one up at a conference that's been handed out. Never do that. Only buy directly from the source. Next, look, this is how you migrate your seed. All hardware wallets has a step-by-step walkthrough on how to restore a seed on the wallet. It's super easy. This is Trezor's step-by-step walkthrough. You can pull this. We'll drop a link below as to where you can pull it. This is for the Model T. In a nutshell, you put your Trezor device in recovery mode. Make sure the seed has no crypto on there, and preferably it's a brand new device straight from the manufacturer. And then you can enter your recovery seed directly into the device. It's that simple. Now, it's a good idea to go through a recovery process. In fact, everybody needs to really test, do this stuff, practice, work on your operation security all the time. Practice. And don't go away from your wallet for a year plus and then come back and try to figure it out. Do it on a quarterly basis. Make sure you're all dialed in and you know exactly how it works. Option number 2 is sending your crypto. This is much simpler, but you need to pay fees and you won't have the experience of learning how to restore a wallet. So there are the advantages of not taking the easy route, which is option 2. But you get a new hardware wallet and you create a seed, then send your crypto from your ledger to your Trezor. And after all your crypto has been sent, manufacturer reset your ledger. And the downside of this is you need to pay fees since you're actually transferring your crypto to a new address. And I would still recommend practicing a recovery just so you can get the experience with that option. Even if you take the easy route, learn to recover. So important. Next question is from Bucky Badger. Can you comment on the Tangem wallet? Very simple. No seed, just backups on NFC card-like devices. So I've never seen anything like the amount of, the amount of promotion for Tangem wallet. When I put out a video and there's 100 or 1,000 comments regarding it in the comments, sometimes my spidey senses go off because it's simply promoted too much. But let's dig into it. So what is it? First of all, it's designed to be a hardware wallet where your keys are digitally stored in a credit card-like device that communicates with your phone and your phone app to send crypto to it. And it is a unique selling point, and it's competing with another wallet we've reviewed in the past called Arculus. Now, it is Swiss-made, which means typically good quality, etc. But let's talk about exactly how it works. The secret sauce is it uses NFC technology. That's near field communication technology, kind of like Apple Pay, Bluetooth pinging, etc., from the app on your phone and the actual card itself. And this is the same technology credit cards use and card readers to perform touchless transactions. And the card uses that secure element and digitally stores your keys. It's similar to chips found in bank cards and credit cards, so they can't be copied or cloned like they were in the past. And when you make a payment or verify an address by placing your card on your phone, it will utilize that, I think it's a 13.56 megahertz frequency to communicate with your phone and sign the transaction. So far so good. Sounds great. Now, we will compare this to Arculus because they are kind of similar in many ways. And I think it makes a lot of sense to do that right here. So the pros of Tangem is that it supports over 6,000 coins, including the big ones like Bitcoin, Ethereum, Binance, Solana, Ripple, Cardano, Avalanche, Phantom Trezor, Polkadot, you name it. The firmware is open source. Yeah, we like that. It's also half the price of the Arculus, coming in around $44 to $56. But there is a con of Tangem. It does not have BIP39 standard, which means there is no recovery seed. Instead, it uses a backup card as you back up. And we are not a fan of this. We saw this with the previous ledger question, how important it is to take your seed, your recovery seed, somewhere else when you don't like the wallet anymore. This is money here. It takes a lifetime to earn wealth and a second to lose. That's why we're very big on BIP39. Now, the pros of Arculus, it was created by a very reputable company in the credit card security space called CompoSecure. It's a metal card. It seems more durable. It also uses BIP39 recovery as a backup, but the cons of Arculus is it's not open source and it has very limited coin support. They do support I think Bitcoin, Ethereum, but not much else, not your altcoins. And they don't even support all of Ethereum's derivatives. And lastly, they are nearly double the price of Tangem. So it's really unclear as, pros and cons of both. And for us, well, I'll give you the conclusion. The card is designed to have a legitimate use case as an alternative to your everyday wallet. It can easily be carried in your pocket. However, it is not, in our view, and we are hyper-conservative, it is not a cold storage device. We would never use them as your primary cold storage device to store your life savings. Instead, they are a hot wallet replacement used to store your spending money, like your Starbucks cash, like you're going to buy dinner or something. Imagine yourself running around town with Trezor in your back pocket and you lose it. It's impractical. It's not safe running around with one of these in your wallet. And that's why we actually don't like it. But you can put in your wallet with other credit cards, pull it out to sign transactions when you need to. They are a great balance between keeping your keys offline and the convenience of making transactions when you need them. So again, small cash holdings only, not your bags. Okay, very, very important and favorite part of the show. Thank you all for everything you do. You help us, help others. And this week we donated to Save the Elephant Foundation, which is a Thai nonprofit dedicated to supporting Thailand's captive elephant population. And Wan Mei is a 3-year-old baby, and she was rescued from terrible conditions and now is at peace in a loving sanctuary. So thank you all. Also, a quick reminder, if you want to amplify your intelligence, please subscribe to the channel. Thank you for all of you out there. Now I'm going to do some live questions. My other fun part of doing this, if I can pull them. And thank you as well for T&D and K8 and everybody in the community. Time for some, because it's the afternoon, I switched to white tea. I'm going to drink some of that, so hope everybody's doing good. One Brightum. Okay, with your Sol 2032 target in mind, how would you proceed once you can identify the Sol top of the current cycle? Going to sell as a percentage or a hold? Well, all of the learnings that we made in the last year and a half, we basically spent an inordinate amount of resources and time building tools to make sure we never make the same mistakes again. In fact, during this video, I gave a sneak preview as to one of the tools, and that's what we call the layer out, which is this one here, to let us know exactly where the layers are of support and resistance, not only to place stop losses, where to layer in, but also where to layer out. It's funny because I started making layer out videos in September 2021, how to take profit. I think the first one I did was Matic, and I nailed 2 of the 5 layers. We never got as high to get the rest of them. But anyway, that's the tool. So what we're going to do here this time around, again, for assets, we will hedge. I'm going to be doing a lot more. Historically, I do what I know best, and that's options trading for equities. But now I found it's even easier with crypto. So I'm trying to find the best crypto options exchange. And we're going to use that not only to help layer out, but also hedge risk and protect our assets against downside without having to sell them. And also there will be a lot of profit taking too. But it depends how things go. In fact, of the top 100 cryptos I look at, number 1 today was the name you're talking about, which I will not mention. Thank you for that. So yeah, we will be we built a whole model around exactly how much to layer out, methodologies, etc. When we get closer to time, the Should I Sell video series, like the Should I Buy, will be back. Iron, can't go broke taking profits. Bingo! Would you proceed taking profits on Tesla with the IA layer out model in percentages? So no, so just so people know, I have 80% hodl bags. In fact, I'm hearing other people use the exact same terminology out there. So other people are obviously watching my channel. 20% aggressive trading bag. But there's certain things that I do not sell or rarely sell, or if I do, I swap one for the other based on time. So with me, I have two things that I care about, Bitcoin and Tesla. So I'm what would that be? TESBIT maxi. And then all the other stuff is kind of there, including a huge amount of positions in Bitcoin proxies like MicroStrategy. I have a bunch of synthetic longs on MicroStrategy and things like that. So what I do is I use my MicroStrategy position to hedge a lot of my Bitcoin position, but I have a core holding of Bitcoin that I hold and I plan to hold forever, because you never want to get rid of something that could just explode from one day to the next. And I remember there were people who had Tesla back in, I think it was 2019 or 2020. I can't remember the exact time, but it went up 800, 900% in like 12 weeks. And they sold after it went up, 100%. And they said, I'm going to buy back in. It never came back. It just went straight up. So I always say, my crude expression is never jump in front of a freight train. These things are freight trains. I'm extremely bullish on Bitcoin because of the scarcity thesis and the adoption. I know a credit crunch is coming, a supply crunch is coming, whatever you want to call it. And people that will want to buy Bitcoin simply won't be there. And, 80% hodl it, huge amount is lost. Very little is coming on market. Halving is coming up. It's just no brainer. And same thing with Tesla. I will consider maybe hedging hard once I see a gamma squeeze or the price gets to 350 to 400. Until then, I think it's a keeper. So, Aaron, thank you for your question. Dog1, shout out to the IFM. Thank you so much for being here, Dog1. Big hugs. Andy, James is Eric Dane actor, your twin brother by chance. So I don't watch movies or TV, so I have no idea about pop culture. But Eric Dane, I'll see what he looks like. I'll tell you. And I don't have a brother either. Oh, yeah. Okay, I don't know. Let me see. He is an American actor. And he's been in TV. He does a medical TV drama thing called Grey's. So, yeah. No, I have no brother, I'm afraid. But thank you so much, Andy. MT, when is the next Basement Robe video? Hilarious videos. Maybe one on all the cults. That'd be a fun one too. I wish we could have April Fool's Day once a month, but that would take away the specialness of it. In fact, the first time I did it, everybody thought I was for real. Second time, people caught on within 2 or 3 minutes that it was a joke. But it tends to be a little bit overplayed. But I do have some concepts for next April Fools. I just wish it would come sooner. And maybe if we can find some other time to do such a thing, I will definitely do it. And a big thank you for your super sticker. AC1, St. Jude needs us. Hi, Mike. Mr. Hammer, Jeff Hammer, thank you so much. Pancake Panda. Chiku, Zeno V, you're always here. KN, all the usuals. Justice for All, my favorite Metallica fan. And see you all tomorrow on DCA. By the way, DCA tomorrow will be on Rand's channel, Crypto Banter. We're thinking about, his plan is to do a Twitter Spaces, but follow me on Twitter, Patreon. I will publish where it is. We're trying to work on the schedule right now because Elon Musk is talking to RFK Jr. At the same time, we are planning to go live at 7:30 a.m. Pacific. So we're working around that. And again, follow me either on Twitter. There should be a link below or somewhere on the card or whatever. And or on Patreon, and I'll publish it. And again, it'll be Scott, myself, CTO, Ivan, Ran, and maybe some very special guests too. Again, people are looking very hard at Twitter as an alternative to YouTube. You won't see our ugly faces, but you'll hear our voices with the equal amount of alpha and passion too. So with that, everybody, thank you all for being here. Thank you to the mods in chat. Love you all. Have a Sunday. Have a great Sunday. And I'm going to maybe do a little gardening this afternoon. Thank you all. And I'll see you all tomorrow. If I can figure this stuff out. I got too many screens open. Yes, got it. Thanks all. Mr. Weston, thank you so much. And you're probably happy with a nice pump today too. So see you all.